As we're having this conversation about whether the Fed put is back, you say the mega cap put is back.
Without
along
question.
The lines of this conversation.
It backstopped the market this week. We were all talking on Sunday about the Federal Reserve backstop. It's the mega cap backstop. And you're looking at, whether it's Meta, Amazon, Alphabet, Microsoft. They're all up 9% this week. So clearly, that's allowed there to be a degree of support underneath the overall index. And I think what that's going to do, quite candidly, if this continues and the S&P sitting at 3950 right now, I agree with you. We should not be raising rates at the meeting next week. But if the market's sitting here and I'm Chairman Powell, I'll go another 25.
Well, why shouldn't
the
we
market
be?
gives them the reason to do it.
Let me just play the other side of the debate. Why shouldn't we? 25 basis points is really going to make that much of a difference? What if they say, what if it's a dovish hike? It's 25, but yeah, we get it. Now we're going to look around. ECB goes 50, Dow's up 320. Why not?
So back in 1994, I keep telling you about this Orange County bankruptcy. That's exactly what Chairman Greenspan did. He went after the Orange County bankruptcy, went one more time in February of 95, and then he was done. Chairman Powell could raise 25 basis points next Wednesday. I believe he's either done on Wednesday or he's done after that, because this is so disinflationary that he is going to have to pause. Why I'm saying if he wants to go 25, which I don't think he should, if he wants to go 25 on Wednesday, the market's kind of giving him a little bit of a free pass.
Yeah, maybe.
That he can do it.
There's still 6 days before the decision. The market's not doing anything.
If the market's
he doesn't have to worry about it.
If the market's here next Wednesday, he's got a little bit of a pass. I don't think he should do it. I think they should be done, and I think they'll be done after either Wednesday or going into the next meeting.
Do you think, Liz, is the market picture worse today than it was 1 week ago today?
Yes.
Or is it the same?
I think it's worse today.
Because of the banking issue?
Because we've identified some fragilities in a pretty big sector, in a sector that all Americans would like to feel safe in, right? So we've identified fragilities that I don't think we really knew existed entirely. Some people knew, but the broad market did not know that they existed last week, Thursday. I'll tell you why I think they shouldn't go next week, because it would confuse the narrative. They've consistently said we're data dependent. We are making sure that, financial stability is intact, yada, yada, yada. If they're data dependent, they have to wait for the data to come in. We know that this is going to be disinflationary. I don't think it's going to be disinflationary enough, to be fair. But they don't have any extra data that says it's actually working yet. So
I don't know.
I mean, they have to wait for it to come.
If you listen, Joe, to what Rosengren is talking about, this is undeniably going to have an impact on demand. Credit growth is going to be slower. Loan growth is going to take a hit. So demand and sentiment, by the way, consumer sentiment, how can it not be somewhat impacted by all this confidence and the like? So if demand is going to be destroyed somewhat by these events, then he doesn't have to do anything, does he?
Well, demand gets destroyed after you break confidence, and these events absolutely broke confidence. I believe it's one of the reasons why the big banks are now trying to place these deposits of billions of dollars into First Republic. It restores a degree of confidence, and I think we need that confidence to return once again. So, I think we're going back and forth on 25 basis points, not 25 basis points. I've shared my feelings all week. I think they have to stop. But I just think the biggest question right now for this market is what goes on as we look forward for positioning. Because you can't tell me this week that you have not had a capitulation of consensus. And consensus was energy, financials, healthcare, right? Shorting bonds, being long commodities. All of that has been unwound through the entirety of this week. And now that you've had that capitulation, how does the market think about that going forward? Where's the consensus? I'll tell you what, I have no clue. Where should the consensus be? Should it be in growth? Should it be in value? Should it be in commodities, bonds? Where do you go from here?
Because to your point, Liz, the whole investment playbook has been turned on its head in 6 days. Mm-hmm. The things that we thought were going to lead this year to begin with hadn't been working anyway. What led last year, like energy and tech, was beaten up, and here it is, one of the leadership groups. But now, if you're worried about a recession being pulled forward by the virtue of what's happened through this issue, Is not the whole playbook turned on its head?
It is, yes. The other thing I would say is, it's like you said, it's been 6 days. We probably look back on this period and it looks like a really quick flash in the pan, right? I don't think that during a time when things like bond volatility and stock volatility have risen so quickly and been all over the place, I don't think this is a time that you make big moves in the portfolio. I think you wait and hold until we have more information, which is probably the Fed meeting. But I don't think that you need to really do much of anything. I'm going to assume that a lot of people have already concentrated themselves on the short end of the curve in money market funds, in things like gold. I think gold has become a pretty consensus call.